Today we're going to talk about the Trump tariffs and how it's going to affect the stock market and the economy. The S&P 500 dropped 20% in around like 40 days and the VIX went up to almost 60. So there was a lot of uncertainty. People were scared. Is this trade war going to escalate? In this video, we're going to talk about what tariffs are, which sectors will be hit the hardest, and whether this is scales or opportunity. Let's find out in this video. Before we start, read the disclaimer. So what are tariffs? Tariffs is basically a tax on imported goods from different countries. For example, if you want to sell a product in the United States, but you produce it in a different country, for example, in China, and you want to import it and sell to the United States people, there are tariffs. So the consumer has to pay extra for your product, which makes it more difficult to sell your products because you cannot sell it cheap anymore. Government used the tariffs to make imported products more expensive so that people are more likely to buy locally produced products instead. So businesses are more motivated to manufacture their own products in the United States so they can avoid the tariffs. If the US puts tariffs on China, China might add tariffs to the US goods. So what's happening is that China retaliates to the tariffs from Trump, and people are scared that this can escalate and that it can lead to a trade war where both sides try to protect their own economies. Are the tariffs going to bankrupt big American tech companies? Is this going to lead to a recession? Let's find out. I have here a small example for Apple. Let's say you want to buy an iPhone 16 Pro in the United States right now. It will cost you $999. But if you buy it in the Netherlands, I'm from the Netherlands, the iPhone 16 Pro, the same phone, will cost you $1,398 at the current currency rate. So you're paying almost $400 extra. And in China, it's like $1,095, so a little bit in between. In short, the people from the United States still have the cheapest iPhones at the moment right now. So why is it more expensive in many Western countries? It's because they have a very high VAT, value added tax rate, and that's why they are more expensive. And the question is, do people complain about this? No, like I don't hear people are fine, and the iPhones are extremely popular in the Netherlands, and many people have them and they buy them. So the conclusion I want to make is that Apple has the brand loyalty and a strong economic moat and a strong customer base, so they have the power to raise prices and people will still buy it. And they can now just give an excuse, yeah, it's just a tariff, so that's why it's more expensive, and people will accept. And all the phones will be more expensive. It's not just Apple. Everything that's outsourced in China, for example, it will all be more expensive. So the iPhones will not be more expensive compared to the other Chinese phones. It will be the same as now, the differences. But so yeah, the iPhone, it can become more expensive this later, but I don't think this will be a problem for Apple in particular. So what to buy? I just listed here 5 companies, 5 of the big largest companies. And this is based on statistics. This is like every time it drops like this, which has happened in the last few weeks, you will see that 3 months later, 6 months later, and 12 months later, your returns will be positive. That's a statistic based on the past. It's not a guarantee, of course. Let's look at the intrinsic values. I took the average of all the analysts on websites like Yahoo Finance and Guru Focus, these kind of websites. And so based on my conclusion on these estimates, you can see that they say that Apple is still a bit overvalued. So this is more like a healthy correction. Nothing to worry about, but it's not super cheap. That's what they say. Microsoft is still overvalued. And then Nvidia is fairly valued. And Google and Amazon, they're undervalued. They are like bargains right now. Most important things as investors is to have a cash reserve, and you can see here that that you need to understand your own risk tolerance. So you can be conservative. That's like 60% stocks, 40% cash, balanced, 80%, 20%, aggressive, 90%, 10%, or you can just go all in. That's like 100%. You put everything in the stock. You have zero cash in your portfolio. Uh, I do more like balanced because I think the cash reserve is important to profit from downturns and to always buy low and sell high. As of April 2025, Berkshire Hathaway holds a record $334 billion in cash and cash equivalents, representing approximately 29% of its total assets. So on this chart, you can see that this is like the financial crisis. You can see Berkshire Hathaway raised a lot of cash before the crisis happened. So when they have a lot of cash, they are more safe. And once the stocks became, so the stocks become too expensive according to him. So that's why he sells at the top, raise cash. And once the problems come, like in 2008, he buys everything back. He puts everything in the assets, and then he has a very low cash reserve. And you see that here in the last few years, he is raising a lot of cash, which is very interesting. This was in 2024, so before this correction. So these cash reserves can really help you. You don't have to be so conservative as Berkshire because you're not managing a $1 trillion company. But so if for your personal portfolio, you can be more aggressive than this, of course. But it's interesting that they're raising cash. The PE ratio of the S&P 500, the price to earnings ratio, people look at this ratio to see if the overall market is expensive or not, considering that growth rates are pretty much the same. So if we look at history, it's like, yeah, it's a little bit higher, but maybe we can compensate that because we have high growth rates because of the AI boom and that kind of stuff. But yeah, 26.28, I will say that the market is fairly valued a little. It's but also not really cheap at all, just normal. So yeah, maybe it's better if you can buy it when the PE ratio is like 13 or 15. But if you wait for that, you might never step in. So I think it's not over this. I think we are not in a bubble territory right now. Should you buy or should you sell? Based on all this information, I would say that the market is still pretty strong. The fundamentals of the market didn't change, and over time things will go higher. And I think the chance is very rare that we will go into a recession or that this will be something like 2008. But now let's look at the charts to find our optimal entry points and to see how we can profit from this situation. So now we're looking at the charts. This is the SPY ETF, which represents the S&P 500, the top 500 companies listed in the US. And yeah, this is basically the benchmark for investing. We can see what's interesting is what happened is there has been a death cross where the 50 simple moving average, the dark blue line, crossed the white line, the 200 simple moving average. And so this can be an indication for a longer term downtrend. This is called the death cross, and a lot of articles talk about it, which can create a lot of fear because everyone is looking at these lines. So you can see here, a few years ago, a cross, the market collapsed, and then once the cross came back, you can get back in. But this gives a lot of false signals, so I don't worry too much about this. But here, for example, in 2008, it worked extremely well. Once they cross, you get out, you let the whole world collapse, and then once they cross, you get back in and you go all the way up. But there are a lot of false signals, so this is not so much to worry about. But if we go back here to the 4-hour time frame, we can see that the short-term trend has definitely changed. So I'm expecting some more bearishness in the short term, because of the trend change, and there's a lot of panic and that kind of stuff. So we can see some more panic selling, where we can profit from. If we look at the next, a strong support level for me is 470. 470 is a strong support level. We can break this level, but not just a little bit, not too much. So if we go to weeklies, it kind of coincides with the 200 simple moving average and this previous high. Based on this, I will give you here what I think is going to happen in the next few weeks. This is like the first scenario. We are now here, and I think that we will have some more panic selling. We hit the 470, and then we bounce all the way back up. This is what I think is the most likely to happen, that we will have some bearishness, There will be a few days where we have like a massive panic seller capitulation, and that's where we can profit here. Once it breaks this line, we can go put more positions in. We can use options to even profit more from the next upside. The second scenario will be that it will just climb higher right now, like this. That can also happen, but I think the last scenario where we just go all the way down, like 30-40%, I think that's very unrealistic. I don't believe that's going to happen. I will bet, like, I will just wait for, so I stay in the market. I keep my cash reserve. I would stay in the market if you're already invested. And once it hits this low, you can use your cash reserve to capitalize on this. So that's my game plan for the next few weeks, month. This is my prediction. Let's see if it works out. I hope you enjoyed this video, and I'll see you in the next one.